Hello, everyone. Today we are going to explore a very interesting and a very lesser known tangent of accounting that is known as the management accounting. So in this presentation, we will be exploring the world of management accounting and its role in guiding the current ongoing business towards success. So first, let us see what do we mean by management accounting. That's the definition of management accounting. So it is a little different from financial accounting, which we were and which we used to learn from our junior college onwards. But here I'm repeating the definition of management accounting. So management accounting refers to the process of analyzing and interpretation and presentation of financial information to support internal decision making within an organization. So this type of accounting is usually done at the higher hierarchical level, that is by the managers, the board of directors, the CEO, and the general managers for leading the business towards success. So there are some key pointers over here. We'll just quickly go through these. So these says that management accounting provides us with an insightful analysis, that is an in-depth analysis of financial data, which can be used by the managers and guide them for making better decisions, which they used to make earlier. And so it's basically an add-on. That's like just like a cherry on the cake. Next, management accounting is future oriented, wherein financial accounting is mostly derived from the historical cost. In management accounting, we focus on the future, predicting the trends which have been followed by the business in earlier days. We would be predicting the future using these techniques of management accounting. Thirdly, management accounting is value driven. That means by examining the profitability and cost efficiency, management accountants can help business to maximize their profits and lessen their losses, of course. So let us see what is the purpose and the importance of our management accounting. So the basic purpose of management accounting is to make decisions. Financial accounting provides us definitely provides us some figures on which we can of course make some decisions, but in management accounting we get some better figures, better ratios, better percentages, better view for for the managers to analyze the data and make better decisions in the future. Secondly, it also optimizes the performance of the company by making informed decisions. As you see, each and every importance and purpose is related to each other. So when you make informed decision, you optimize the performance of your current ongoing business. And the third point, where we measure the success, if we make informed decisions, we optimize the performance, and eventually we can measure the success, or we can see the success by our profits in the way of our profits. So, and lastly, it drives strategic planning. It means by analyzing the data which is available to us from the financial account, management accountants contribute to the development of making of these effective strategies which will help in the growth of business. So here are some key differences between management accounting and financial accounting, wherein there are more than three, but these are the most important ones, and I feel that these are basic to know for you before you beginning your journey towards your management accounting. So basically, let's talk about focus. That management accounting focuses on providing internal information, wherein financial accounting provides focus on external information. So management accounting will tell us how much sales we have done in this quarter, how much sales we have done in this quarter, And similarly, it will compare sales in each and every quarter. So it will give us a trend of what has been going on, and through which we can predict in the future that okay, the sales will increase or sale will increase, decrease in this particular order as it has happened in the past. So also at the same time, it has a demerit that we can just assume. We do not know because it does have some limitations too. So one of the limitation that management accounting has is, yes, it is assumption based. So you cannot just trust, but you can kind of rely on information which is obtained from management accounting. Next, users of the management accountants are, of course, the internal stakeholders, the people who hold the larger chunk of the company's shares, like managers, executives, CEOs, the board of directors, well as the financial accountants. Also, if the financial accounts are also seen by these above mentioned people, but also it is shown to the people who hold the lesser, the lower chunk of shares in the company, like the people who invest in the companies or probably the regulators of the company. Let's talk about the time frame. So we all know the financial year starts on 31st March and it ends on 1st April of every year. So financial account is made and finalized on 31st March of every year. That is the end of the year. So the costs which are recorded in financial statements are known as historical costs because we analyze the cost which has happened over the period of time of 1 year. On the other hand, when we see management accounting relies on real-time data. So real-time data can be obtained daily, weekly, monthly, quarterly, like maybe semi-annually or annually, but it is real time because we know we cannot predict the trend, but we can always keep a track of it. Let's move ahead and see some types of management accounting reports. So these are very simple, where firstly, we'll talk about the financial reports. Here in financial reports, we talk about our basic profit and loss account. We see our cost sheets, we see our revenue statements, and we, of course, see our balance sheets. Here we know how much cost, how much losses, how many expenses, how much profit, and how much gains we are gaining from the financial reports. The second type of management accounting report is known as the budget reports, which is, of course, shows the performance of the previous plan. Like if we have planned something, we implemented that, and after implementing that strategy, we got some result. So we get an insight of whatever has happened earlier. So these monitors the actual performance against planned budgets. So with this, the managers will be able to take corrective actions for the future upcoming years. Next thing is known as the variance reports. We can also call it a variance report. So variance is basically, we call the difference between the cost, difference between anything is known as variance. If I'm getting an apple for 10 rupees, if I'm getting an apple for 5 rupees, and of course there's some difference. So we call it the variance in price. So these variance basically are the differences between the actual and the expected performance, which of course the managers and management accountants see, which helps the manager to identify the area in which they are lacking, and from there onwards they can begin their journey for improvisation of that particular area to generate more profit in the future. So cost accounting and its role in management accounting. As I said, that accounting is a huge area where a lot of type of accountings comes under it, like financial accounting, cost accounting, activity-based costing, and cost and managerial accounting and management accounting, and so on and so forth. There's so many types of accounting. So here we have the concept of cost accounting, where you analyze the cost of making one particular product, direct, also indirect. For example, if I look at this mobile phone, so if I am to calculate the cost of this particular phone, I have to understand how much material, how much labor, how much overheads have been used in this particular mobile phone, as well as how much indirect material, indirect labor, and indirect overheads have been used for manufacturing this particular product. Cost accounting only considers manufacturing of products and sometimes also services. So we'll see how cost accounting plays an important role in management accounting. So here the first statement, of course, describes it that cost accounting plays a very, very important role in management accounting. By how? Tracking cost. Tracking cost by how? By analyzing all the cost associated with the products and services and all the activities to determine their actual cost from the estimated cost. And now, after identification of the cost, after the cost is identified, we try to control the cost somehow so that the expenses are less and the profit for that person or the company is more. Then cost accounting helps management accounting by giving decision support, because providing cost related information assists the manager in making informed decisions that can help to maximize the profitability of that company. Cost accounting also enables to the management accountants to influence the price changing of that particular product, and considering both the actual cost which is required to produce that commodity, as well as the amount of quantity, the quantity of the product which is expected in the market. Next, we seeing budgeting and forecasting in management accounting. So budgeting and forecasting are basically tools in management accounting. So these are tools. So basically what we do with tools is we use it for something, some purpose. Like if I say that my phone is a tool, I use it for communication. I use it for communication. I'm using this particular platform for communicating. It is a tool. So tool is basically it uses it is used as a medium for connecting two things. So budgeting and forecasting in management accounting has these particular three rules, wherein the first tool says that it helps in setting financial goals. So this is used in establishing targets and objectives to guide the organization's financial performance. What the performance is right now, what was it earlier, and what should be in future. Next, allocation of resources to different departments, to different projects and activities to optimize their utilization. As after analyzing all the reports, we come to know that which department lacks which particular thing. So hence, it is used for optimum utilization of each and every resources available to the company. Third, monitoring performance, where regularly reviewing actual result against the budgeted expectations. This will help us to identify the discrepancies and the deviations which are there between the actual one and the expected one, and we will make corrective measures to delegate that difference. Hence, so here we come to the end of our presentation, where there are some key takeaways I would like to tell you. So, management accounting empowers organizations to make informed decisions to optimize their performances and drive strategic planning. We also spoke about the key differences between financial accounting and also cost accounting, as well as management accounting. We know that financial accounting works on the historical cost, management accounting works on real-time basis and real-time data. So management accounting is a totally data-driven decision-making tool. So if there's no data, we cannot do anything in management accounting. So data is very important, and data, we will get the data from financial accounts and cost accounts. So to access to accurate and timely financial information helps the manager to make better decisions for the company and the company's future. Management accounting also use the budgeted cost and the future forecasted cost, which helps them in strategically planning the future. So management accounting contributes to the development of effective strategies for the future growth. Number three, performance optimization. After identifying the discrepancies and the differences between the expected ones and of course the realistic ones through cost controlation and resource allocation, management accounting will enhance the performance and efficiency of the organization. So this is all for the lecture today. I hope everyone got the insight of how management accounting plays an important role in delegating the business towards their success, and how other branches of finance, other branches of accounting, just like management accounting, cost accounting, financial accounting, activity based accounting, and almost many other type of accountings helps in management accounting.